Hey, good evening, everyone. Thank you for attending our mid-year market briefing. So the title of our presentation today is Positioning for 2015. Okay, for the rest of 2014, we actually have both good and bad news. Okay, let me start with the bad news. First, the market would most likely remain weak. And the reason why the market would most likely remain weak is because August is historically the weakest month of the year, being the ghost month for Chinese investors and also the summer break for a lot of European investors. So usually market volume is a bit weak and share prices weaken during the month of August. And in terms of valuations, in January of this year, we said that the market seemed cheap. In contrast, now it has gone up quite a bit and it is no longer cheap based on 2014 earnings prospects. And finally, foreign investors who have been net buyers in the market since January of this year have turned again into net sellers just the past week or two. Okay, and this is due to concerns of rising inflation and also because of the political noise, concerns about the PDAF and the DAP. Okay, but now let's talk about the good news. Okay, what's the good news? So we have our conviction call. So we have two conviction calls. First of all, we believe that the PSEI will exit the long consolidation phase towards 2015 and end the year 2015 at 7,800, which is a new high for the PSEI. And the reasons for our bullish outlook for 2015 include the slower than expected pace of monetary tightening. Second, economic growth in the Philippines gaining momentum. Third, fundamentals in the country catching up with valuations finally. And lastly, we believe that the poor sentiment that we're seeing right now will act as a contrarian indicator and is actually a very bullish indicator for us. Okay, monetary tightening. So I think if you had been investing in the stock market for a long time, you're probably aware that higher interest rates are negative for stocks. So just a recap of what happened in 2013. So in May of 2013, we know that the stock market from a peak of 7,400, it was subject to a steep sell-off. And the reason why it happened was because a number of Fed participants expressed willingness to reduce quantitative easing, or as they say, it's the taper tantrums. It started in May 2013. And then in December, the Fed announced that it would start to taper its bond buying program from 85 billion to 75 billion. And in January, it said it would reduce it by another 10 billion. So the tapering is actually ongoing at this point and being reduced by a value of around $10 billion on a monthly basis. So that was last year. So fast forward to June this year, people were expecting initially interest rates to already start going up in the US. But instead, what happened? In Europe, the European Central Bank last June announced liquidity enhancing measures. So the ECB base rate was reduced from 0.25 to 0.15. And in fact, now if you're a bank and you deposit with the ECB, you will be charged a negative deposit rate of 0.1%. Okay, and they're opening a 400 euro billion liquidity channel to encourage European banks to lend money. So they want to, deflation is still a problem in Europe. Okay, in the US, the Fed officials on the average reduced their long-run interest rate forecast from around 4% to 3.75%. Okay, this is due to a less optimistic long-term outlook on the US economy. So they're still quite optimistic about 2014, 2015, but going forward, they're saying that we can't afford to be too aggressive when we tighten liquidity conditions because the economies cannot bear it. Deflation remains a risk at this point. So if interest rates are going to go up, you can't afford to increase it significantly or aggressively, not at this point at least. Okay, in the Philippines, we are, at this point, we hear a lot of concerns about inflation. As you can see, the blue line, it has gone up quite a bit. Inflation reached north of 4% during the past few months, and it surprised positively. But I'd like you to focus on the gray line, or the gray bars. The gray bars are the core inflation figures for the past few months since the start of January of 2013. Core inflation is inflation less volatile items like food and gasoline prices. So if we take out those volatile items, you will see that actually inflation is not a problem in the Philippines. So in that respect, even though the BSP is right now taking steps to slowly tighten liquidity conditions, we don't expect them to be increasing interest rates or to tighten significantly, as what they are doing is only preempting potential bubbles that could happen because of highly liquid monetary conditions. They are not trying to pop any asset bubble, so they have room to actually take it easy when they increase interest rates. Okay, for those of you who attend our market briefing on a regular basis, finally, 2015 is the year when we will enter the demographic window. We've been talking about this for a long time, and finally we are entering this. And the demographic window is a period of high economic growth brought about by a large number of people entering the productive ages, okay, of 15 to 64. Okay, so according to the UN, by 2015, this is the Philippines' time to enter this demographic window. And you know, in the past, based on the performance of other countries that entered the demographic window, the GDP grew by around 7.3%. Okay, so just an idea of what will happen from 2015 to 2050, the productive population of the Philippines will grow by around 48%. In contrast, the dependent population, which are the children from 0 to 15 and the elderly above 64, will only grow by 11%. So this will mean more Filipinos with greater spending power. So this will be positive for the Philippine economy. Next, investments in the country are also showing signs of picking up. I know this chart is not so clear, but if you focus on the green line, which is the average of the last 4 quarters, you will see that it is actually reversing its downtrend and starting to trend up. During the past briefings, I've talked about how the manufacturing sector is actually making a revival in the country, how more foreign investors such as Japanese are putting up factories in the country to capitalize on local demand and also as a diversification out of China. Okay, and how labor costs in the country are no longer that expensive relative to Thailand and Indonesia. So finally, we're seeing a revival on investments, and also, of course, around us we see a lot of construction taking place, more infrastructure, so it's already yielding some fruits. Okay, next we have the PPPs. Okay, in the past, people would joke around and say PPPs are PowerPoint pa lang. Okay, so now it's not PowerPoint none. You can see that from a very slow start of only 2 billion several years ago, okay, this year so far, the value of PPP projects awarded is already 119.5. So 119.5 billion includes the CALAX and the LRT1 projects. Okay, so here's the list of projects that have been awarded. Okay, and if you actually go to the PPP website, there are several other projects that will be that the government plans to award. Okay, and so actually for the rest of the year, I think they are eyeing another 150 billion pesos worth of projects. This would include the Laguna Lakeshore Expressway Dam project, okay, which is a floodway control and also an expressway control, and that's 122 billion pesos. Okay, So these projects will definitely spur economic growth. And of course, let's not forget the government, despite all the controversy, they're actually increasing the spending. The green line shows the growth on a year-on-year basis, and the blue bar represents the share to GDP of government spending. So clearly, it is trending up. This is only up to 2013, but for 2014, the government plans to increase by another 13%. For 2015, the plan is to increase it by another 15%. I think the president is on his way to submit the budget. So looks like despite all the controversy going on, he is still continuing on with passing the budget to ensure that spending will continue to increase on the government side. Okay, so what about the DAP? A lot of concern about the AP, but in reality, let's put everything into context. The AP is actually a very small part of the GDP. Let's go to infrastructure spending pala muna. We'll see that infrastructure spending actually is increasing at a faster pace compared to total government spending. So as we've discussed earlier, we're seeing government spending increasing at the teens, but infrastructure spending is increasing by 30%, 50%. Okay, the plan is to increase infra spending from around 2% of GDP to 5% by 2016. Okay, and again, the DAP, as you can see, it has been falling in terms of absolute amounts, and of course, as a share of GDP at less than 1%. So I think, that's not much to be worried about. And of course, if you listen to the State of the Nation address, you'd know that I think what is good to note is that the president, in a way, has said that he's going to accept the decision of the Supreme Court, but instead is requesting for a supplemental budget so that the projects that are funded by the DAP will continue. Okay, for me, this is actually the most exciting part of 2015. 2014, while we are optimistic about 2014, during the last briefing, we said we were a bit concerned because of the slow EPS growth. But in 2015, EPS growth will recover. So from a 5% EPS growth in 2014, in 2015, we'll see that recover back to around 14, 15%. Okay, as you can see, you have a lot of sectors that are delivering growth. But for us, the sectors that will deliver good quality growth would be your banks, conglomerates, power, and property sectors. So those four sectors will be the ones to deliver quality growth. And we will discuss them one by one. The banks will deliver good quality earnings growth because loan growth is very fast at this point, and margins are actually normalizing or improving with higher interest rates, and trading gains have already bottomed this year. Okay, so that goes for the banks. For the conglomerates, a lot of the conglomerates in the countries actually own shares in banks, so they will benefit from the rebound of bank earnings, while other subsidiaries of our conglomerates are also doing well. Next, we have the power companies. Okay, a lot of our power generation companies have expansion plans that will come online. And of course, a lot of one-offs on revenues and expenses will normalize come 2015. So earnings should recover because of those factors. For the property sector, we still continue to see strong demand for residential projects, and also strong demand for offices and retail, allowing these companies to expand their leasing portfolio. So because of this, the PSEI, although right now, if we focus on 2014, we're trading close to around 20 times PE, but if we look at 2015, we're trading at 16.9 times PE. I know that some of you will still say that it's elevated if you look at the 14-year PE band. It's at the upper end of the range. But I just like to point out that compared to where it was 14 years ago, you can see that interest rates are really much lower today at 3.9%. In the past, year 2000, I think we still saw the 10-year bond rate at around 16, 17%. Today, it is much lower. And you know that lower interest rates are good for stocks, good for valuations, because of course, the hurdle rate now is much lower. In the past, people did not even have to think about investing in the stock market because they just needed to put their money in bonds. But today, that is no longer the case. People have to think about other ways to earn money. And the good news, and of course the bad news for some, is that interest rates are going to stay low. And the reason why this is going to be the case is because our government's finances are already very strong. The debt position of our government is actually shrinking relative to GDP. And in the past, of course, we always needed dollars. We needed to attract dollars to come in. Right now, because of all the BPOs coming in, all the OFW remittances that we're getting, we don't need any more dollars. And in fact, we are a net lender internationally. And finally, I think a manifestation of all of this is the ratings upgrade. The Philippines is now investment grade, and possibly we'll have two ratings agencies upgrading us further to be 2 notches above investment grade. So this is definitely good news. So of course, if a country is more credit-worthy, then expect interest rates to go down. So I'm not saying that interest rates are going to go down now, but most likely, even if it increases, it's not going to go back to double-digit levels or to 2000 levels. So in that respect, we can expect a re-rating on the PE. I don't think it would be wise for us to wait for PEs to go back to 15 times before we look at stocks, because it might not happen until we see a bear market, okay? Okay, so earlier on, I talked about investor sentiment being negative. We believe that sentiment is really very bearish at this point, and I believe that a good indicator of bearishness is the value turnover in the Philippine Stock Exchange. As you can see, the average daily value turnover in the PSE has dropped by close to 30% during the first half of the year. And foreign investors' value turnover have dropped by 30%. Okay, locals, it's down by 28.5%. Okay, net foreign buying, although they are still buyers in the market, it's a lot less by 26%. And mutual fund net sales for this year is actually down by 90%. So sales of equity in balanced funds is actually down by 90% this year. So meaning, you know, investors don't want to invest, really don't want to invest in the stock market. And this is despite the removal of the EMA accounts from investing in SDAs. Okay, so people are just a bit content investing in time deposit or placing their money in time deposit, which at this point in time is yielding less than 1% already. Okay, I think one of the reasons why some people might be a bit wary about 2015 is because of the Asian Economic Community, because 2015 will be AEC, okay? But we believe AEC will be both a threat and an opportunity. What should we expect by 2015? By 2015, because of AEC, there will be free flow of goods, services, investments, capital, skilled labor between ASEAN countries. So what is the concern about? This would definitely lead to more intense competition. Philippines is not competitive in attracting investments relative to other ASEAN neighbors. And Philippine companies are small relative to foreign companies. So a month or two ago, we went around to the listed companies to ask them for their views. In general, what we gathered from the listed companies is that they're not too much concerned about it. They recognize the problems surrounding AEC, but they're not too concerned. And they shared the reasons why they're not concerned. First, most of them have already been preparing for the AEC. And they said, as far as duty-free importations are concerned, the tariffs have already been reduced for most products as a result of AFTA. And this was already effective around 2008. Okay, for the listed companies, they have dominant leadership position and strong branding in the competitive local market. So for example, for the banks, what they're doing, I mean, if you notice during the past few years, they have been aggressively acquiring smaller banks, expanding their branch network, creating scale so that it will discourage the foreign, or it will make it difficult for the foreign banks to come in. Okay, they have scale domestically, they have distribution network, okay, and some have experience operating overseas, so they're not shy about going overseas, for, at least for some listed companies. So we have the likes of Jollibee who are also expanding overseas, and of course SM. And then opportunities, they also said that there are opportunities. There are some companies that can actually import raw materials at a lower cost. And they said that it could be easier to deploy labor in other countries, and it would be easier for them to expand in ASEAN. Okay, so in light of everything, we believe that the market weakness that we may see in the second half of 2014 will be our opportunity to accumulate for 2015. And these are our favorite sectors and our stock picks. First, I'd like to start with the banks. The reason why we like the banks is we expect EPS growth for the sector to rebound from 1.7 to 15% in 2015. And this will be brought about by the bottoming of trading gains, expansion of net interest margins, and higher demand for loans, where the big banks have an advantage. Okay, so at least the big banks are really focused on growing the lending business, and we believe they're at an advantage come 2015. Okay, although there's a potential threat from foreign banks coming in because of the regulation that now allows 100% full foreign ownership, we don't think that this is a major threat in the short term. This is more of a long-term threat. And as we've discussed earlier, the banks have been preparing for this already by beefing up in size and expanding their branch networks. Okay, the power sector is another favorite sector for 2015. Okay, and the reason why we like the power sector is because of the rapid sector EPS growth of around 20% for 2015. And next year, there could be a power shortage. We believe that the potential power shortage next year could improve sentiment for the sector, and some power companies could benefit from increases in the WESM price, at least for the power that is not contracted. Unlike 2010, we are not expecting the size of potential gains to be as significant, but nevertheless, there is still an opportunity for these power companies to make some extra money because of higher WESM prices that could result from the power shortage in 2015. And our top pick for the sector is AP, or Aboitiz Power. Okay, the next sector or the theme that we like is the infrastructure theme. There will be higher infrastructure spending, as discussed earlier, and of course, there will be more PPPs launched, benefiting companies that are investing in infrastructure. Okay, our best ideas for this theme would be Ayala Corp. Ayala Corp has been very aggressive in bidding for PPPs. In fact, it now has interests in around 70 to 80% of PPPs that have been launched so far. So it has a Danghari, the automatic fare collection system, the Galax, LRT1. So that's 4 projects out of the 7 that were awarded. And it, of course, I'm sure they will also bid for the other road projects. And they've shown that they've already discussed the strategy, the cash flow. It looks like they will be continuing to participate in the next projects that will be awarded. Okay, especially because it will be somewhat synergistic to their property subsidiary, as it would lead to higher prices for Ayala Land projects. EI, of course, should benefit also, as more infra projects and more PPP projects would lead to a bigger potential for construction. And finally, the property sector, we continue to like it. I know that this is a bit of a contrarian pick right now. The sector is being bashed. We believe that the residential sector is still in a bull market. It's in a secular bull market. Due to the favorable demographics, you have that growing population of Filipinos who are entering the working population, needing to buy a house. And of course, low interest rates. So in the past, you couldn't buy a house unless you had cash. And now, you can buy a house even if you just have a good income. Okay, no signs of a bubble, and oversupply concerns are overblown in our opinion, because if there were such a problem, take-up sales would not be as strong as they were as disclosed by these companies. And people are forgetting that you have the other side of the coin. You have the rental properties, which remain very strong. Demand for offices remain very strong because of the BPO sector, allowing our property companies to expand their leasing portfolios. And among the listed companies, we prefer the large players because they have a huge land bank. They have a strong recurring income base that makes them very strong, and they have a strong balance sheet, giving them a lot of advantage. So our top picks are Ayala Land, Mega World, and SM Prime. Okay, our other picks would be PLDT. We like it for stable earnings and high dividend yield. So for those of you who are looking for some proxy to fixed income, you could actually buy PLDT. It provides a dividend yield of around 6% per annum. DNL is, we believe, the best proxy for the consumer sector. It's a beneficiary of the country's resilient consumer spending since it supplies to consumer companies. And it's focused on specialized products, makes it less vulnerable to competition, unlike other listed companies that are right now suffering from intense competition. But our major concern for DNL is that valuations have been are a bit elevated at this point, so please wait for pullbacks before buying the stock. So this is my last slide before I go to the summary. So these are our stock picks. So we've decided to roll over the targets already for 2015 so that at least, people will not be fixated about 2014 anymore. Okay, so we have to start looking forward to 2015. On the buy below price, we've actually lowered the buy below price for property companies because we believe there's an opportunity to buy them cheaper because sentiment is quite poor. So I don't think there's any rush to buy them. Okay? So, in summary, the market would most likely remain weak for the remaining part of 2014 due to concerns of rising inflation, political noise, and focus on the PSEI's 2014 valuation. However, we believe that the stock market will exit the consolidation phase as we approach 2015, and the second half of 2014 would be the best time to start positioning for this eventuality. The reasons for our bullish 2015 outlook include a slower than expected monetary tightening globally and only a slight increase in interest rates domestically, the growing momentum of domestic economic growth brought about by resilient consumer spending and higher investments and infrastructure spending, recovery of listed companies' earnings growth, and poor investor sentiment. Our favorite sectors and stock picks for 2015 include the banking sector, BDO and Metrobank, the power sector, AP, infrastructure plays, AC and EI, PLDT, and DNL. Okay, just before I end, as a quote that I'd like to share with you, which is actually often quoted by my boss, Dino Bate. He always says that it's always the darkest just before the day dawneth. So, notwithstanding the bearishness, do not lose hope. 2015 should be a brighter day for all of us. Okay, that ends my presentation. Thank you for your time and enjoy the rest of the evening. Thank you very much.
Good evening, everyone. My name is Francis Diaz from the Private Clients Group of COL. We'd just like to remind everyone that you can ask questions by texting the number shown on the screen, or you can tweet us at COL Financial using the hashtag AskCOL. So anyway, we'd like to thank April for that wonderful presentation. Obviously, I think a lot of our investors have been concerned due to the weakness in the market as well as the lack of volume that has been presented to us. Nevertheless, I think April has reminded us that our fundamentals remain strong, and this is actually a perfect time to look at your portfolio, rebalance your portfolio for a very, very strong 2015 ahead.